How's it going, guys? Welcome back to the channel. So a little bit of a different video this time. I'm going to be talking about specifically how to get better entries in your trades. I see way too many people getting in too early and getting stopped out, getting caught out by manipulation. So I'm going to show you just a couple things here that can help you out, and a lot of it comes down to patience, but let's just go through a couple things that I want to show you, and hopefully it can help you guys out. So a couple weeks ago, on the 14th of May, so nearly 2 weeks ago, just want to show you this trade that I took. So I actually got in, so I'll put the screenshot from my entry on the screen now. So I believe it was, I had a pending order at 115.350. So I got in on this entry here, and trust me guys, you show this to anyone, they'd think like you made this up. But I'm going to show you exactly how and why I got this entry. So to begin with, we did have this this Fibonacci, this 61.8, and these two rejections to the downside just come shy of it. So I was looking at this gap getting filled, and obviously you can see here we had this inverse head and shoulders, left shoulder, head, and this right shoulder. So scaling down to the 15 minute, let's go on the 15 minute. Let me just find this area a second. So yeah, so what normally happens, guys, is we normally take out the low before reversing. You see too many people, let's just draw this a second. Let me get me brush. So you see too many people, just say this is resistance, price comes up to it once and they sell straight away, but 9 times out of 10 price will come back up to this area, and majority of the time it will take out this high before then reversing, but it normally happens in 3. So say this is resistance, we'll have 1 touch, 2 touch, and we'll come back up, we'll take out the high before then making the official move to the downside, or if obviously if it's support. So one touch, 2 touch, spike through before then reversing to the upside. So guys, what the majority of retail traders do, and I done it myself years ago when I started out, and I'm sure you have as well. So let's get this tool back out. So this is resistance. Price will come up and touch this resistance, and they'll sell straight away. So they have a pending, sorry, they have a sell order here with stops just above the wick, thinking that's magically gonna drop off to the downside like that. But what happens is, let's just get rid of this risk to reward tool so you can see it. Price will come down. People will be adding positions, thinking, oh yeah, I've got this trade, and it will come back up and come down again, and then the third time it will spike up, and people will be like, oh my god, this resistance has been broken, so let me get a long position in. This is what happens time and time again, guys. You have the stops below this resistance, now support, and then what price will do is it will then make its official move. So people getting caught on this here. Where's my rectangle tool? Guys, this here is just manipulation and noise. You don't want to be entering here. You want to be entering after this manipulation's happened. So then you can put your stops above this wick and catch this move to the downside. So what happens here is a push up to the upside to resistance once, twice, third time, spike out, take out these highs, and then make its move to the downside. So that's just manipulation. Like I say, it's getting people caught on the wrong side of the market. So you need to learn patience here. So next time you go to take a trade, just say you've had resistance touched and you want to take a trade. Wait for another touch. So then you get the second touch. Yeah, sometimes price does make a double top and then make its move, but a lot of the time it will get taken out these highs before then reversing. So just be patient. You see this one touch, don't take the trade, sit on your hands. See the second touch, possibly if you've got other confluences like strong trend lines and Fibonacci's and good price action, but like I say, you want to be waiting for this third touch. And let me show you what happened on this euro yen. I'll just leave it there for now. So this was my entry here, and you can see it happened exactly here. So we had this one bottom, See, price never just it made a little bit of a move, but what is it? It's like it's 20 pips. You don't want to be getting 20 pips unless you're like a scalper or whatever. But I'm here for like the 100, 200 pip moves. So yeah, price made a little push up to the upside. People were getting in longs, seeing these big bullish candles, taking long positions. Stop just below here, and the same on this second time. See this double bottom here? Let's just zoom in a little bit. So price would have closed like this, or even people getting in after this bullish candle with stops just below this wick. And you see the third time, I actually, like I said, I had a pending order at 115.350, as I showed you on the screenshot. So I had this pending order waiting for this 61.8 to get filled, and knowing that the market moves in and does things in threes, this gives me a great reason to get a pending order here below this low. So people seen this double bottom, seen these bullish candles. People were getting in longs, probably even got in long over this. You see this wick here? People probably even got longs here when this was bullish at one point. And then boom, price come down, took out that, hit their stops before then making its move to the upside. So you see this time and time again, guys. Have a look on like previous data. You'll see it happen. So one touch, two touch, final push to the upside, taking out these highs, liquidating for its push to the downside. And yeah, like I say, this here is just noise. You don't want to be getting involved unless you want just 20 odd pips or so and risk getting stopped out majority of the time. So see, this here is just consolidation. You want to be waiting for this manipulation to happen before then taking a long trade. I can't remember exactly where my stop loss was, but something like that. So guys, when this big push down happens, so this big push here, people were entering like long positions here, seeing this like big bearish candle, in this case big bullish candle. So they'll be getting in after these bullish candles because they think they've missed the move. But guys, you never miss a trade. In order for the market to go up, at some point it's got to retrace. Like, it's not just going to keep going up and up and up and up. You know what I mean? It's got to come back at some point and make at least a little bit of a retracement before then making its move to the upside. So say if you want to be really like conservative, you can wait for this big push to happen, and then you can enter on the pullback. So you see, put this consolidation zone here. When we break out of a consolidation zone, we normally do come back and retest it, and you can see here on this trade it happened exactly here. See, we pushed up, people were entering longs, but you need to wait for this pullback to then get a better entry before then it makes its push to the upside. So this is where you can use like a trend line. So you might have a touch up here, you can join up trend line, look for the third touch and Fibonacci's, etc. So that's how you build confidence around taking a trade like this. So guys, one thing I want you to take away from this is you've got to start noticing the waves that happen in the markets. So as I said, the market's not just going to push down like this, like constantly. It's got to come back and have a retracement. And what normally happens, there's 3 different types of trading sessions. So you've got the US, the London, and the Asian. So all of these all of these sessions, don't know why I've got to do this, get rid of that. So all of these sessions, the price never moves like bullish in all 3 sessions. So just say you got the US session that's like bearish, you'll have like consolidation in the London, and then you'd have like retracement in the Asian. So you've got to recognize this. This push down here could be the US session, and then we might have some like consolidation in the London, a little pullback in the Asian, and in the US again we'll have that second leg to the downside. So you've got to accept price coming against you and recognizing these different sessions and what happens in these different sessions. Like too many people, they're in a trade, say from here, nice profit, they're holding their position, price will come down, make this retracement, and people will start taking their positions out here, taking profit, when really they've got like a, I don't know, a 1-to-1 trade or something, where up here they had like a 1-to-2 or so. Before then, waiting for the next session to open, then it'll make its second leg, then they'll be kicking themselves because they got out when they could have made, I don't know, like this 1-to-4 trade. So that's another thing, guys. Be aware of the sessions, be aware of the market waves, be aware of manipulation, and yeah, just start recognizing this. So guys, I hope this video helped you out. If you've got any questions, leave them in the comment section below. So you want to be able to read price action and know what's happening in the price. Price action is your best friend. It's better than any tool and all these indicators that people put on their charts. You see, majority of my charts are quite bare because I'm just using the best tools, the strongest levels, and just pure price action. Let it tell me where it wants to go, you know. But yeah, guys, if you have any other video requests, leave them in the comment section below, and please like this video if it did help you out, and don't forget to subscribe, and we'll see you in the next video.